Hi everyone. It is Sunday afternoon, late afternoon. It's winter here in the UK, so in London you never really know. It just starts to get dark, so very, very, very quickly. And it is now Sunday the 6th of December, hurtling towards Christmas. So it's only a couple of weeks away. And what I'm going to be doing now today, I'm obviously going to be looking at the dollar index. I'm going to be looking at the major currencies. We've been getting some really good trends on the dollar index, and I'm hoping or anticipating really in terms of my trading plan that is going to happen. However, I am expecting a retracement throughout this week. So that means that the markets could potentially go sideways, or there could be a brief retracement before they then resume the longer term trend down towards, I think it's going to head down towards 90. So I think we've got a pretty clear path for a weaker US dollar. In terms of news, we really have some CAD news coming out on potentially on Monday, a little bit on Wednesday. We've got Euro news on Wednesday, and we've got US dollar news on Thursday and Friday. So there could be some disruptions there, but for the most part, I do expect that the US dollar is going to continue to weaken, and therefore I'm going to be looking for great opportunities on the majors. So what I'm going to do now is head away to the charts, and we'll have a look at that. So starting off with the dollar index, obviously a daily on the left-hand side, weekly on top right, and then monthly top bottom. Very, very nice downtrend, almost at our 90 target. Once we break through that, I have to reassess, but then we're going to start to head towards 89 and potentially even down towards 85 at some point. It's a good thing, but we're still largely range bound during this period. So I don't want to assume we're going to break out of that yet. I want to see how we react when we get to 90. And when we do, there's going to be a reaction against that. There's going to be a bump. So this is what I'm looking for this week. On this, any retracements before we get to 90, I'd be looking for any retracements back up and looking for shorting opportunities, which when we look at the major currencies means I'm going to be looking for buying opportunities against the US dollar, or at least a weaker US dollar position. However, should the market decide, well, I'm so close to 90, I'm at 90.69 now, I might as well just carry on down, then it makes more sense for the market to just continue all the way down to this level before then becoming extremely overextended and thereby, and then at that point then beginning a retracement. So either a retracement right off the bat, which is Monday and Tuesday, then and deciding subsequently to carry on down, or alternatively pushing all the way through. And if that is the case, then certainly the 4 hourly is going to be a time frame to watch. So if I just go down to that 4 hourly time frame on, say, euro dollar, so if we go across to euro dollar here, obviously this is now showing the potential to retrace where it is now. It's overextended. That would be great. But if at the same time it decides it really wants to push on through, then I'm going to be watching it on that 4 hour time frame. So I'll just go through to that. And what I'd expect to see then is a consolidation at this point, then probably a flat level breakout at that point. So I'm just going to leave a bit of a marker there and just say, look, I'll be looking for breakouts at that point and a continuation up to here. So it's going to be one of those two, ultimately a retracement and then a continuation, or potentially a continuation before hitting that level and retracing later in the week and working through that. But principally working around the idea of a stronger euro, weaker US dollar. Let's go and have a look at sterling and just go back to that weekly. Really nice. It is back up at resistance. So if we get that weaker US dollar now, because there is a bit of a rejection off that level, what I really want to see here is to see sterling or cable break out through above that 1.35. That would be really good. It would see here on the monthly, we'd actually start to see we've got a nice uptrend here. We've got lows, we've got a high, we've got a higher low, we've got a high high. We'd start to see us venturing forth ideally to somewhere around 1.4. Would be fantastic to see that happen. So I'm cautious around that level, but if we can break through that level, then I'm going to be looking for long opportunities there. The same with the Aussie dollar against the US dollar. It's now got a confirmed uptrend on the monthly, and the really big level is 0.7750 up ahead. We've got some room to go, and so any kind of retracements here, it's relatively healthy. So actually the 4 hourly might be sufficient to just look for cycling opportunities on that. But in principle, again, looking for a weaker US dollar, stronger Australian dollar. Then Kiwi, struggling around this area, has had a really good run. It is overdue for a bit of a retracement. It's at a key weekly level. It could potentially do a weekly retracement down towards 68.50, which is down towards here. So that could be the case if we get a stronger dollar. The Kiwi itself could decide that it wants to just take a bit of a breather. Alternatively, if everything goes our way and we get a really much weaker US dollar, we're probably going to find, and everything else stays the same, we're going to find the Kiwi dollar is going to attempt to continue up. It's going to see this as a retracement. It's going to pull back into the moving averages, potentially producing a nice little bullish candle and potentially continuing on right up until 73. So I've included two potential possibilities here where the markets will either retrace first and then attempt to resume, or will attempt to push through and then potentially run out of steam at a later stage. But for intraday traders as well as end of day traders, I think the opportunities are going to be better for the 4 hours and below than potentially on the end of day. And to give you a bit of kind of context, I am generally, or have been for the last few years, have been predominantly swing trading on the higher time frames. However, because of lockdown, I'm at my desk more often. I do tend to look at more intraday trading. So then looking at dollar yen. So what's going on with dollar yen? It is the least kind of trending or cooperative chart. You can see it is slowly but surely, very reluctantly letting go of this 104.50 level to potentially continue. And yes, I maintain my position that if the dollar is going to weaken, that's going to be the case. But certainly it would appear that Bank of Japan are managing to hold, tread water where they are. I'm not convinced that they really wanted to go below that, so they might be effectively trading their own currency in their own different ways. Whether they're doing that, it's obviously legit. They are perfectly entitled to maintain a relationship or a fixed interest rate or close to a fixed exchange rate with one of their major trading partners if that suits them. But so it means that the problem is that although I expect it to head lower, it's not, to me, it's higher risk to trade because of that kind of potential reluctance to just commit to the trend. But I'll keep an eye on it anyway. Then having a look at dollar Swissy, which is very nice. I would really like to see a retracement back up into this 0.9. It's a beautiful round number. It's potentially a fib level. Back into this area. Just going to move this right down here, back into that area. There would be great into the moving averages or into key fib levels, and then a continuation down would be fantastic. Next kind of, I'm going to have to start adding in fresh levels now because we've been range bound for so long, but this is something I'm very keen to see. The price action here does signal that it wants to do the retracement now, but that isn't a guarantee. It could, of course, just do an outside bearish candle, continue out until it gets down to the next level, and then potentially do that. So I'm prepared for both. Dollar CAD, very overextended. Not so bad on the weekly and really not that bad on the monthly. It's got all of them have room to go. I would say that we've got a fairly large candle now, so we are heading into an area where this is likely to do a deeper retracement. And again, I'd love for it to come back into a monthly level or potentially a daily level here and encounter some strong resistance here and then resume that trend to the downside. So all of that to me being kind of, that's my trading plan approach to the major currency pairs, is working around the idea of at some point a potential US dollar retracement, but principally a weakening US dollar. And that's it. At this point, none of the other currency pairs are catching my interest. I'll do that on my intraday and during the week on my kind of daily markets analysis videos that I do live on YouTube. So thank you very much. Have a great week, and we will see you next week.